Hello friends, this is Raj Sastri from Raj Option Trading. Today is October 1, 2021. I want to talk about trading preparation for today. With that, let's quickly jump into Thinkorswim platform to see how futures are trading up, trending up, and then look at few of these great names. So with that, off to Thinkorswim here from TD Ameritrade. So as you can look through here, we got futures market, showing a little bit gain here today. Um, the futures are indicating S&P 500 will have a little bit higher opening. I like these type of wicks here where it's top heavy, as you can see here. So this really it's top heavy and a long wicks at the bottom. This is telling you that maybe a little bit it may be a little stronger day today, a little higher opening. We will see how it shapes up. This market can shift quickly, so with that, be careful out there. And next, let's look at Nasdaq here. As you scan through, I'll make it a little bigger here. Nasdaq also, after being down for 4 days continuously, it's showing some strength here. This is where we can pick up some great quality stocks and go from there. And then we got here Dow Jones Industrial Average. This is also showing some strength here. I like the shape of the candle here, a little bit top heavy, indicates there may be a little bit bullishness here. And then we got here Russell 2000, and it's also showing some strength here after 3 down days here, showing some momentum. And as you can see, a top heavy candle, which is always great. And as you scan through here, let's look at what bonds are doing here. And as you see here, bonds are really a little bit weaker opening today. That can help stock market. And interest rate itself, as you scan through here, yeah, interest rates are also a little bit weaker here. That will also help stock market. And as you see here, rates have been going up of late. That's why stock market is taking a beating. There is news about inflation, semiconductor shortage, labor shortage, supply chain issues. All these things are factoring into higher inflation and lower stock price. That's what you've been seeing of late. And then if you look through here, crude oil is really doing nicely of late. I would wait for a little more pullback and buy some quality names in the oil patch. And then you got gold here. Gold is still a good buy. As you can see here, gold is taking a beating, and anytime gold falls down, I would pick up some quality gold names, including a body gold and GDX, GLD, and so on and so forth. You could look at some of those ETFs like GDX and pick up some quality names and go from there. So now we will jump into our list here and see what we can do. So this list is organized by stocks that have fallen off the cliff yesterday. As you see here, we got Bed Bath and Beyond. Really pulled back so heavily yesterday, down 22%. And then we got CTAC, TCS, the container store, and so on and so forth. All these stocks have pulled down double digits yesterday. And this is when we come in and see, okay, what's worth buying. There are a lot of good quality names we could buy slowly and accumulate a nice position. So with that, let's scan through this one by one. And I've got few legends here for you to understand. We got rule of 40, where you see a highlight in the first column here. For example, Bed Bath, TCS, all satisfy rule of 40, where quarter over quarter sales growth plus gross margin handily beats 40. And then we got your highlights in the second column here, which indicates there is a high short ratio and low RSI. For example, Bed Bath and Beyond, high short ratio 22% and a low RSI, tells you could pick the stock up at this bargain price slowly and expect a short squeeze for you swing traders. And we got your third column here, price. Whenever institutions are buying heavily or insiders are buying heavily, that's when we have this cell highlighted here. For example, we got CTAC, low price stock, low market cap. Institutions are buying heavily, so that's why it's highlighted. You could take a look at that and buy a quality stock like CTAC along with these institutions here. So with that, I know the list is handful here. I want you to take a look at this and see if it makes sense for you. And many times when you see quality stocks with the rule of 40 satisfied, like BBBY, TCS here, Dillard's, Coles, you could buy into them slowly and go from there. And many times you got high short ratio, as you can see here. Those are the ones for you swing traders, and you could slowly buy into those stocks here. And I got more stocks here as you scan through here. Even CCXI somewhere down here, I think the stock has come down drastically. As you can see here, I think it's good to buy CCXI also into this weakness. And we got one more, couple more here. You can scan through this at your leisure and buy some quality names. The moment you see, highlight in all the three columns, that's the triple whammy for you. It satisfies rule of 40, high short ratio, as well as institutions or insiders buying. That tells you there is a lot of catalyst for stocks like Nordstrom here and BTBT, FOSL, and so on and so forth. You could look at some of those stocks at these levels and go from there. And next we got one more list here. You can scan through. I will highlight few ones with nice sales growth. Rule of 40 satisfied, like Foot Locker here, down big time as you can see here. Low RSI, could be good to buy into Foot Locker at these levels. And then you got Newell Brands, HPI, same story, nice growth here. And look at the names where you got the highlight in the second column here. Raphael, as you can see, a nice insider buy here. That's a great story. Insiders are showing some conviction here. And if you look at stocks like high short ratio stocks here, as you scan through here, we got one here which is Raphael, again high short ratio. That's a good one. You got high short ratio, high institutional buying. You could buy into that slowly and expect a nice short squeeze. We got few more. You could look at those and buy into slowly. Even the cannabis stocks here. This is not a cannabis stock. Even Tilly's here. This has got nice fundamentals here with the quarter-over-quarter sales growth, gross margin greater than 40. I would look into that one too. So with that, we got one more chart here. You could look through similar thought process. Great fundamental stocks are highlighted here where rule of 40 is satisfied. I would look at some of these beaten down names here and buy into them slowly. So what we'll also do, we got probably we'll look at few of these names and cut through. Many of you folks, you don't want to look at the huge list. Instead, you want to cut through the noise here and invest according to your style. So what I will do is I'll quickly jump into Excel spreadsheet where you can do some filtering and look at the candidates that you might want to focus on depending on your trading style. As an example, if I go back here to the Excel spreadsheet, here I got the list of all the stocks which are pulled down pretty bad yesterday. So starting with, let's do some filter here and look at the rule of 40 satisfied. So all these stocks you see here, I pulled up where rule of 40 is satisfied. So these are the great companies where there is a sales growth plus gross margin satisfies rule of 40 handily. So you could take a look at these companies like Bed Bath and Beyond here, dropped big time in one day. As you can see here, down heavily, 22%. You could look at that one. And we've got Container Store, Dillard's, KSS, and so on and so forth. So these are the great stocks where we have nice rule of 40 satisfied. There's a great sales growth and gross margin. And if you have to really think through and see, that's one criteria. I want to also look at second criteria where there is a nice insider, nice short ratio. The candidates, if I go through here and look at the short ratio here and go from there. So if I go here and put a filter here, give me nice companies with a nice sales growth, and I also want a high short ratio. These are the candidates for you. As you can scan through here, Let me close this guy down. So as you scan through here, these stocks have got nice sales growth, satisfies rule of 40, and also nice short ratio here. So these are for you swing traders. You could look into some of these stocks here. If you don't want to be buying fundamentally weak companies, these are fundamentally sound companies with sales growth plus gross margin, satisfying rule of 40, and also have a high short ratio. This is where you can expect a stock to spike higher and opportunity for a swing trading. And then, if you also want insiders and institutions buying, you could do that filter here, and you can say, you know what, I want those stocks plus I want to see institutions or insiders buying. So if I do this here, you'll see only those names where you got a triple whammy, as you say. There's a high, nice rule of 40 here. It also has got high short ratio, as you can see here, and it also has insiders and institutions buying. These could be for you. You want to be really a little bit safe. You want sound companies with nice sales growth, rule of 40, check. And you want institutions or insider buying, check here, all institution buying, insider buying, good catalyst. And you also want high short ratio. You want to be a swing trader here. So these stocks here satisfy that criteria, and you could go with that. And sometimes you'll say, you know what, all these criteria will give you a small set. Instead, we'll say, you know what, don't worry too much about short ratio here. I want good solid companies with the nice bargain price. So this is where you can look at rule of 40 satisfied, check. And I also have insiders or institutions buying, check. So this could be a good one for you fundamental traders. And now there are a lot of option junkies. For the option junkies, you could look at the options ratios as example. So what I will do is I will remove rule of 40 here for a moment, and let's look at what option junkies can do. So for option junkies, you could look at a little different criteria here. So let's look at if you're a put option seller, you want to get some premium in, you could just look at the stocks where, hey, you know what, I want to sell put option. So if you look at this list here, especially these stocks which are sold off, you could right now sell put options on OSH. As you can scan through here, when you're selling put option, you want IV percentile to be high, meaning you want to bring in the premium. At the same time, you want the RSI to be low. So this stock here, OSH, gives you high IV percentile and low RSI. That's basically put option seller dream. You could buy slowly into, you could sell some put option here, maybe 45 days out or so, and go from there. Then you might be a call option buyer. You could do such a filter here and say, you know what, I'm a call option buyer, and tell me what to buy. So you could go here and just do call option here, true. So these are all the great stocks for the call option buyer. But as a call option buyer, you also want rule of 40 satisfied great companies. So you could say, hey, give me only those rule of 40 candidates. So here you got the companies here, rule of 40 satisfied, and we got low RSI, and we got low IV percentile. This is for you call option buyer. So you could buy some call options, go delta 70 or long term, and take advantage of stock which is dropped down drastically in one day, and low RSI, low IV percentile. You're not paying too much premium, and you could go from there. And I know many of you, you don't want to buy call option. Instead, you want to sell put option. So what you could do is, you could go here for now, remove rule of 40 here. We want the whole set here. And we'll, instead of call option selling, we'll say put option buying. So this is where, put option buyer will really hedge against market sell-off. So I will say I want to buy put option. There you go. So for put option buyer, as you can see here, we got a lot of good candidates which are dropped down here. So put option buyer, you want IV percentile to be relatively high. Let's see here. I think this list doesn't seem to be great here. All right, so as a put option buyer, I think we'll do one more filter here. We want IV percentile to be low. I think that gives it. Yeah, this is a great list here. For a put option buyer, you want RSI to be high, meaning you want stock to be overbought. So you want stock to pull down. That's why selected all the candidates where RSI is high. And you want IV percentile to be low because you don't want to pay too much money to buy put options. So these candidates will give you high RSI and low IV percentile. So you could buy some put options and expect the stock to pull back a little bit and go from there. And typically, I also advise at times, when there is a rule of 40, typically don't go for those stocks when you buy put options. It's okay if you buy one lot, but typically look at weaker candidates where there is not too much quarter over quarter sales growth. So that's one way to look at it. Buying put options is always better than shorting the stock outright. And then we got one more criteria here. We'll quickly look at that. So let me uncheck this. And sometimes you are really selling, you want to sell call options. So if you want to sell call options, you could look at this list here. And you know what, I want to sell call options. And here you got candidates where you could sell some call options here. And we want high RSI, meaning stock to be overbought. And you want a low RSI, you want a high, if you are selling call option, you want IV percentile also to be high. So it looks like this list here is a little. Let's do one thing. Sell. I will uncheck this here and look at a high IV percentile scenario. We'll go back here and check these two guys here and do a filter. And we want here a high RSI. I would say RSI greater than 60. So stocks are overbought here. And I also want a IV percentile which is also high. So I bring in some good premium. So I will say greater than 50. There you go. So these are for you call option sellers. You could take a look at these here where we have a high RSI indicates stock is overbought, and we got IV percentile through the roof here indicates you could bring in some good money selling call option. But be a little bit careful here. Many of these stocks have fallen down drastically, so be a little bit careful. When in doubt, always do a call spread so that way you can sell a call spread above the stock price. That way you are not overexposed. So with that, let's go back here. This is a list here. With that, thank you very much. Happy investing and trading. Be careful, and stock market is volatile. Please subscribe. Thank you.